Now, all eyes are on the Fed ahead of tomorrow's decision and on tapering. That decision could have a big impact on mortgage rates and the still recovering housing market. For more, I want to bring in Bloomberg senior economic analyst Neela Richardson. Neela, thanks for joining us. Let me first ask you what the state of the housing market looks like to you. Can we say still recovering? Are we back yet?
There are some bright spots in the housing market for sure, Matt. I mean, we are not nearly in the situation where we're concerned about falling prices. Prices have stabilized. They even have increased quite a bit, but we're not anywhere near where we were in terms of a normal market. There are still several indicators such as housing starts, new construction, existing home sales, purchase applications that are still underperforming relative to what's normal. And all these indicators are dependent on interest rates, Matt.
Yeah, well, exactly. One of the things the Fed was trying to do was to get mortgage rates down so that people would go out and buy houses, right? That seems to have worked. If we see tapering, does that mean mortgage rates necessarily go up right away?
Well, when Ben Bernanke mentioned tapering in May, since he's mentioned that, mortgage rates on the 30-year fix have gone up a full percentage point. Now, there's two schools of thought. Either they've gone up all they're going to go up, or there's more room to grow. And, Matt, I have a feeling that with this next taper decision this week, we may see an increase in mortgage rates, which will slow the momentum in the housing recovery somewhat.
I know that one school of thought, Neela, is that if you expect an increase in mortgage rates, then buyers will go out and try and take advantage of the current low rates as quickly as possible. Do you see any of that happening?
We didn't see that flood into the mortgage market when rates went up. The mortgage market is really being fed, the housing market is being fed by investor purchases. And some of those investment purchases have been all cash, Matt. So credit is still tight, and it's still really hard to get a mortgage in this country for regular folks. We still have high unemployment numbers. We still have incomes that are not growing. And so all these factors mean that the average household is still under pressure when it comes to buying their first or second home.
So, bottom line, what do we expect from Ben Bernanke tomorrow, Neela? Is it going to be a big taper, or we're going to get an easing?
At most, it's going to be a little taper. There's still too much weakness in the economy and the unemployment market, and still too much sensitivity in the housing market to really expect anything more than a small-scale whimper of a taper.